Ladies and gentlemen, very happy to have with me today Jeroen Blokland. It's another one of our speakers that we're going to have at Pepperstone Talks. So as we do at this presentation, we like to kick things off with getting to know our speakers. So Jeroen, just give us a bit of a background on how you got into finance, and that would be lovely. Thanks.
How I got in finance, that's a long time ago, more than 20 years. But I started out at a research company that was called Iris. And then soon thereafter, I became a portfolio manager, a multi-asset portfolio manager within Robeco. And I've been there for almost 20 years. At the end, I was the head of multi-assets before I started a new company called True Insights. But most of the time, I have been a portfolio manager within multi-asset discipline.
Lovely, Jeroen. Thanks for giving us that little brief background on how you got into the world of finance. Now, Jeroen, if time travel was a thing and we could turn back the clocks, is there anything that you might do different in your financial career, or any advice you could give to traders starting out in this industry?
Well, maybe two things I would like to highlight. The first is that making sure that you don't make any big mistakes is as important as getting it right all of the time, which is not possible. So it's impossible to get the highest return. But if you are possible to miss out on these big mistakes, that is a very important aspect. The second is, and that is very personal also for my private investments, that I tend to get out too soon. So let your profits run is a really, I think, a strong thing to apply when investing, because I have a tendency when I'm in the money to get out too early. So maybe have a little bit more patience.
And is there anything you're doing recently to implement in your process to improve that, like using trailing stop losses or partial closing positions? What are you doing to improve that, Jeroen?
Yeah, for most, if not all trades, we have stop losses, and also we look at the level of volatility in the market, because that also if volatility spikes, then a big error. You want to miss those. Our framework, which is called macro sentiment and valuation, holds all of these indicators, of which we believe that they will help us to maintain a position or close a position. So to keep this a fallacy or this personal aspect out. This is why we look at all these indicators, and we do that in a consistent way. And that is also, as you see now, that a lot of people have been drawn back into the markets after a couple of good days. We have stayed out because of the framework. That is the reason why you have to have a framework.
Yeah, I totally agree with all the volatility at the moment. Jeroen, finishing off, it's a market-related question. And we've seen, there's this obsession with inflation at the moment, and the market's so sensitive to any readings coming on. And as a result, they're quite skewed positioning-wise, and that can cause quite a lot of volatility. So how do you better navigate, this extremely high sensitivity to data? What is your take?
This is exactly what you have seen in recent days. So whenever there's an inflation number that's either matching the expectations or either a little bit below, like the headline inflation number of the Eurozone, a lot of investors think this is the moment to get back in, whereas you have to make the case that this will change something, for example, for central banks and especially the Federal Reserve. Will they change forward guidance? It's way too early to expect that, because inflation is there, it's high, but also inflationary pressures are still immense. So yes, with volatility this high and you get these 3% up, 4% down days, a lot of investors get drawn in. But the framework says, don't do that yet, because there's no confirmation on the macro leading indicator or valuation level that we are already there.
And you said, there's that fear and frenzy indicator that you use, which you think is quite useful for traders.
Yeah, so we have developed a fear and frenzy indicator that captures 11 of the well-known sentiment indicators, like the VIX index, like relative strength, moving averages, flows, things like that. And what we have done, because a lot of people talk about these indicators, but some of these indicators work all the time. Some of them work only at extremes, and some of them work only at one side of the extreme. Now, we have developed a model for that. And if you look at that model, it's by nowhere near fear. And that means it feels differently, especially after one of the biggest drawdown that we have seen since COVID started. But the sentiment indicators overall say we are not depressed enough yet to give a buy signal. And so this is also one of our indicators that prevents us from getting in too early.
So Jeroen, if I'm understanding it correctly, basically you think that the S&P 500 still has a bit of room to move lower potentially. But I think what's interesting in this move compared to what we saw at the height of COVID is, to use the analogy of the hare and the tortoise, this move's been a slower bleed as opposed to those limit down panic selling. So I'd just like to hear your thoughts around that too before we finish off.
Yeah, well, COVID was very different. It was an economic sudden stop. Literally everything stopped. And here you see it's evolving. So first of all, we had this bearishness around central banks. But now you see slowly this is going into a slowdown of the overall economy. And also, if you look at consumer sentiment, which is really depressed, but also the ISM manufacturing, there are a lot of indicators that say that it will go down. And the next domino, it seems, is now earnings. So we had this Walmart earnings numbers, which were really disappointing. So you see this gradually evolving. And I think you have to get through all of these phases before you can say, okay, the markets have repriced enough that all the bad news is in. And I don't think we are there yet, because this slowdown has just begun if you look at some of the bigger numbers.
Okay, great, Jeroen. Thank you very much for sharing your insights with us. And I'm looking forward to seeing you at the actual events. Thanks you for joining us. I really appreciate it.
Okay, yeah, thank you. Bye.